Speaking of Alphabet, shares hitting a record high after reporting a record profit for the second consecutive quarter. Our Deirdre Bosa has more on the monster numbers. Hey, Dee.
Morgan, record profit and notching its biggest earnings beat since going public in 2004. Now, over the pandemic, Alphabet was the big tech laggard in terms of share price, but this year it is really seen as the reopening winner, and it's now the best performer among the group as digital ads. They continue to recover. Now, what stuck out to a lot of investors, and which our .com reporter Jen Ellie has detailed well, the strength of YouTube and that potential threat to Netflix. The business, which remember was bought by Google for less than $2 billion in 2006, it is on track to pull in $29 to $30 billion in revenue this year. Netflix expected to report about that amount this year as well. 46% revenue growth for YouTube in Q1 versus 24% growth for Netflix. That is how we get there. Now, the business model is, of course, very different, as you guys well know. Netflix relies on paying subscribers. YouTube relies mostly on advertising. Netflix spends billions and billions on original and licensed content. YouTube has an army of creators whom which it shares ad revenue. Needham analyst Laura Martin estimates that YouTube would add 23% to Alphabet's share price if it was separately traded. So certainly something to watch play out this year. Search, though, still the main breadwinner at Google with nearly $32 billion in sales. That could bode well for Facebook tonight. But of course, privacy changes still a question for these companies. CFO Ruth Porat continued to paint Google as being on the side of protecting users in last night's call. And investors, of course, guys, not so worried. You mentioned this, Morgan. Alphabet shares hitting all-time highs this morning.
I mean, certainly an incredible quarter for Alphabet and one that investors are cheering. I mean, you just look at the share price right now. But when you see stats like company search engine, 92% of worldwide traffic, Maps, 89% share of navigation, and YouTube, 73% of online video world. I know you guys have been following this so closely in Tech Check. You got to wonder what these results do to the lawmaker and regulator case around antitrust and the like.
Always a question, and something that we do follow really closely. Google, out of all the tech giants that are under antitrust scrutiny, is really seen as the name that could see regulation first or quickest because of the investigations that it is under. However, investors really just shrugging this off, and we continue to ask them about it, and they just don't think that lawmakers are going to be able to act quickly enough. There's certainly precedent there. The reason why we are here with a lot of these tech companies, and the reason that Alphabet, Google was able to create what some argue are monopolies. But again, on the call last night, there wasn't really any talk of antitrust regulation, how that could threaten the business. Little more talk than usual of privacy, and that's likely the thing that is to weigh sooner than sort of a broader, extreme breakup are these privacy changes. But of course, Google is limiting third-party cookies on Chrome, but not the case on YouTube, Android search, where it has a lot of data.
Shepard Smith here. Thanks for watching CNBC on YouTube.